Is your home feeling a bit small or maybe just tired? If you're a homeowner in Queensland, I know that you have faced the big question, how on earth do we upgrade? Do we renovate and fall back in love with our home, or do we sell up and chase a new flame? Hey future strategist, Alex here, your mortgage broker mentor from Funded Finance, and today I'm breaking down the complex financial considerations and lending implications of renovating versus relocating, equipping you with the knowledge to make an informed decision from a borrowing and equity perspective. Now, this isn't just about personal preference. It's one of the biggest financial crossroads many homeowners face. Both paths involve significant costs, opportunities, and potential pitfalls. And as your mortgage broker, my goal is to help you understand the true financial implications of each choice, how lenders view them, and how you can best leverage your existing assets to achieve your property goals. So let's dive in. Now let's start with the renovating path. You love your location, it's got the perfect parks, everything's there, works close by, but your home needs a bit of a refresh or some more space. Now this often involves tapping into your existing home equity. How to finance renovations from a lending perspective. So the equity release or a cash out, refinance or top up. This is the most common way of doing it. If your home's value has increased or you've paid down your loan and you've built equity, and lenders may allow you to actually refinance your existing loan for a larger amount, cashing out the difference to fund your renovations. Alternatively, if your best lender or your current lender is your best choice, you can stay with them and top up your existing loan. From a lender's perspective, they're going to assess your borrowing capacity based on your current income and expenses. Your credit score may be looked at a little bit, and critically for this option, they won't require an as-if completed valuation, especially if the renovations aren't structural. Now, construction loans is another great option, and for major structural changes or extensions, a specific construction loan might be more suitable or actually required from the bank. Funds are released in stages called progress payments as the work is completed, rather than one lump sum upfront. From a lender's perspective, they're going to need detailed building plans, council approval, fixed price contracts from builders. Now, the other option, and the last but not least, is a personal loan and credit card. These are a disastrous idea. Do not do it. Don't pass go. Go straight to jail. Avoid them. If you're looking at using them, just cash flow it. And if you can't cash flow it, you can't afford it. And if you've got no equity, you definitely can't afford it. The pros of renovating financially, right? So no stamp duty. You avoid a massive cost of not paying stamp duty. You can leverage existing equity so you can utilize the wealth that you've actually built up in your existing property, and you've got potential to add significant value. Strategic renovations can increase your property's value, boosting your equity even further, and you avoid selling costs. You don't have to deal with an agent. Agents, I love you, but sometimes not dealing with you is brilliant. The cons of renovating. So financially, there's risk of overcapitalisation with some platinum taps, spending more on renovations than the market ultimately thinks it's worth. You can blow out costs, especially if you're doing like a cash out equity release. You can go over budget, requiring you to dip into savings or borrow more. You may need temporary accommodation, might need to move out, add costs to moving and rent elsewhere. And you're going to increase your loan repayments and loan amount. Your debt is going up. Now let's explore the relocate path. And this is a tremendous way of doing it, right? So you're ready for a change of scenery. Want a bigger block or a different neighborhood. This path absolutely involves dealing with an agent, selling your current home and then buying another. The costs of selling in Queensland are real. So you've got real estate agent commission, typically averages between 2 and 3%, depending on the quality of agent and your location. You've then got marketing and advertising fees. They cannot sell a secret, and this can be a few $100 to several thousand depending on the quality of photos, how many you get, the online listing, signage, conveyancing, and legal fees can also be up to $2,000. Look, your old banks, they're rude. They're going to charge you $350, $600 for a mortgage discharge fee, and then you've got to prepare it for sale. You might need to do some painting, repairs, some guttering, the roofing. You've got some things there to maximize your sale price. But there's also some costs of buying new property, not just selling. So you've got the stamp duty side of things, and this is a significant upfront cost that you've got to pay when you buy a property. It's calculated on the purchase price, and while first home buyers, they're getting discounts and owner occupiers do get some, it's still a significant cost. If you're buying just just for $700,000, you're looking at 26 grand in stamp duty. Conveyancing and legal fees up to 200 grand, maybe just under if you use my recommendation. Just saying, pay up for a good conveyancer. Now, the trick to selling, buying, selling is navigating the timing. Selling first reduces financial pressure. It means that you know your exact budget for the new home. The downside is you may need some temporary accommodation. Buying first with bridging finance especially, this is where a mortgage broker's advice is crucial. Bridging loan covers the gap between buying and selling your old home, and you essentially have two loans for a short period or even one big one depending on the lender you go to. The benefits and the pros are you avoid moving twice. It secures your new home in a competitive market. The downside is you can be complex and often has high interest rates and fees and carries risk if your old home doesn't sell quickly for the expected price. Banks will assess your ability to service both loans during the bridging period, and they'll take extra steps to make sure that you aren't overcapitalizing. So sometimes it can be a really tremendous benefit. For your primary place of residence, the home that you live in essentially, any capital gains from its sale is generally exempt from CGT in Australia. However, if you've used part of your home for income producing purposes and you've included it as a tax write-off, or it was potentially an investment property in the past, there may be some CGT rules that might apply. It's always important to chat to an accountant. Now, as your mortgage broker at Funded Finance, my role isn't just to help you get a loan, it's to be your strategic partner in these major decisions. When weighing up renovating versus relocating, here's exactly how I can help. So firstly, we're going to assess your true equity. We're going to take some potentially conservative things with the bank. We're not going to go YOLO, what do you think it's worth, $1 million? No, we're going to look at the data and figure out exactly how much equity you've got versus the loan amount and what we can use in a renovation versus what would free up potentially more in the sale of your property. We're then going to model out the cost. This is something that we always do in every single transaction. We make sure that we know exactly what you've got, so there's no surprises. It's going to take the whole situation, a whole transaction along the way. We're then evaluating your borrowing capacity. So we're looking deep into your financials to make sure that we've got it all tightened down. We're essentially doing the exact same assessment that I would do if I was working still at the bank. And then we're going to make sure that structuring the loan correctly is going to benefit you, whether we go through the construction loan, the equity release, and we're going to make sure that we're doing this correctly and nothing's going to trip us up along the way. And definitely one of the most important pieces to this puzzle is we're going to compare the market rates. It's actually quite a small piece because it's the easiest to compare what interest rates are out there. We're going to combine that with valuations, what banks think your property's worth, and then go and look at the policies as well to make sure that those are all meshing together to find you the right loan. And last, definitely not least, I have connections, friends, professionals that I work with and refer to all the time. We are going to connect you with the right professionals and right people to help you along the journey. We've got conveyancers that are absolutely incredible what they do, buyers agents, selling agents, all these experts that lead with integrity and go with the values that we as a business refer to as well. Look, the decision to renovate or relocate is a deeply personal, but the financial implications are significant. So don't make this complex choice without a clear understanding of your options and how they impact your mortgage. For a personalized analysis of your situation and expert guidance on how to fund your next property chapter, reach out to Funded Finance today. Let's make your next move a smart one.